Today, we're fortunate to be joined by Jorge Ganoza. He's the CEO of Fortuna Mining. They just wrapped up the first half of 2024, just released their Q2 numbers, and they were impressive. Jorge, welcome to Ron's Basement.
Ron, once again, thank you for the invitation and the opportunity to speak to your audience.
Yeah, well, it's our pleasure, Jorge. And when I saw the second quarter's numbers that you released 2 days ago, I was very, very impressed. It seems to me that the company is executing on many levels. Do you care to share with us what you think were some of the highlights, some of the big achievements of the second quarter?
Yes, we generated 116. We produced 116,000 ounces of gold. That's a gold equivalent. We have captured the benefits of this rising market for the prices of gold and silver. So on the back of these 116,000 ounces produced, we generated sales of $260 million. Our average realized price of gold for the quarter was $2,337 versus what we captured in the previous quarter, which was $2,087. That was the average realized price of gold in our sales. So, rising prices are driving higher sales and margins with the production that we have, which is meaningful, right? 116,000 ounces of gold for the quarter. We remain very much on track to meet our annual guidance, what we inform the market we estimate will produce in 2024. But more importantly, all of this came with strong free cash flow generation. We generated $93 million of cash flow from operations before working capital adjustments. That equates to about 30 cents per share. That was a beat with respect to market estimates. We had an adjusted attributable net income of $30 million, or 10 cents per share. And so we had strong net income, strong cash flow generation. If I grab my free cash flow from ongoing operations, my total cash flow from ongoing operations, and I discount the capital we reinvest in the business, Ron, we still generate $39 million of free cash flow from operations, right? So strong quarter in terms of production, capturing the benefit of higher prices, all of this translating to healthy free cash flow. So, all in all, a very strong quarter. The business is running on all cylinders. And yeah.
I think you're being modest. I think it was an extraordinary quarter. And Jorge, I've heard you mention in the past a word that stuck with me, and that was harvest, right? That you make long-term business decisions to position the company to endure through any precious metals environment. Right now, it feels like obviously we have strong metals prices, but the company is performing very well at the same time. Do you feel like right now is a time of harvest for Fortuna?
Absolutely. And to talk about harvest, let's look at our newest mine briefly. Yeah. At the Séguéla mine, we produced gold at a cash cost in the second quarter at a cash cost of under $600 per ounce, right? And our all-in sustaining cost for that one mine was around $1,100, slightly below $1,100 per ounce. When the industry's average all-in sustaining cost today hovers between $1,400 and $1,500 per ounce, right? So very low cost operation with capital needs that take our AISC to a very competitive level of under $1,100 per ounce. with tremendous exploration potential that we can talk about because we're capturing, unlocking the geologic potential of the property. So we can talk about our Kingfisher discovery later on. But, that is where we're harvesting the cash flows, and that's where we've been deploying capital and now harvesting the fruit of that work.
Yeah.
Right.
Yeah. You're generating a lot of cash, deploying a good portion of it into continuing to grow the company, and it feels like there's real momentum right now. Within the industry as a whole, but in particular with Fortuna. If we focus on Seguela for a few minutes, I do want to bring up that you, I think, had a great achievement there over the last couple of years, and even during this last quarter, because you faced a challenge. There were some power supply issues that were beyond your control, obviously, that shut down the mine for 19 days, I think it is. But you were still able, and this is what really struck me as I listened to you during the conference call. You were still able, because of what I would call, very strong strategic, I guess, mine planning and mine management. We're able to make some changes to still produce a lot of gold from Seguela, even though the mine was shut down because of lack of electricity for 20 out of the 90 days of the quarter.
Yes, the team did an excellent work at our Seguela mine, and our management team and everybody there got behind how to address this issue. For the benefit of your audience, Cote d'Ivoire, the Ivory Coast, has been contending with the unrelated failures at two of their power generating plants in the country.
Mm-hmm.
So the issues started in the month of April, and I can report that right now, as of the end of July, let's say, the power availability from the national grid, at least for us, is 100%.
Wow.
Right? Okay. So the problem was contained within the quarter. So what did we do? So there was intermittent power availability throughout the second quarter. And if we add the lost hours, they amount to about 19 days of production for which we were down. So we were able to do two things. One, we have flexibility in our mine plans. The deposit allows for that kind of flexibility, and our teams, got to work and reschedule things, and we were able to capture those opportunities. So we were able to fit, for the time where we had power, higher grades.
Yeah.
And then this is no secret, for a number of months and quarters, we have been talking about the optimization of our processing plant at Seguela, and the nameplate capacity, the design capacity of that processing plant was to treat 154 dry metric tons per hour. In the second quarter, we were able to squeeze a lemon and do 208 on average for the quarter, 208 dry metric tons per hour when we had power to run the mill. Wow. So that's 36% above nameplate capacity. Yeah. So higher throughput, higher grades helped us balance those 20 days, 19 days lost of production because the processing plant was down due to power outages. Now, again, those issues were contained within the second quarter. For the month of July, as I just mentioned to you, Ron, power availability from the national grid has been 100%. Yeah. So we're back on track.
Yeah, I think that's a real testament to you and obviously the team there at Seguela, that they faced. I mean, you and I have joked around before that the mining business is full of challenges, but that's a pretty big challenge. 20% loss of power, but to still be able to make strategic moves and manage through that and still hit your numbers. So I think that's great. I want to come back to Seguela in a minute and talk about the Kingfisher, talk about potential expansion. But I also want to make sure that our audience knows that the other mines are performing well also. You've got Lindero up in Argentina that I know you're investing, what is it, $40 million into a leach pad expansion. The Cayoma mine in Peru also performed pretty well, which is more of a silver mine. Any comments on what went on in Latin America during the quarter? If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
I would like to frame the conversation on 3-4 aspects because of the business, because we made significant strides during the quarter on 3 aspects of the business, right? Mm-hmm. One is capital projects. We just talked about Seguela and our ability to extract more throughput out of the facility we built. That is a net gain from optimization of process design. And that is significant value we're harvesting for our shareholders. Mm-hmm. Without having put any significant money, additional funding or CapEx to the Seguela processing plant, we're able to run it almost at 40% higher capacity, right? Wow. So in the second quarter, that higher capacity allowed us to balance, challenges in power supply and whatnot. Next quarter, we'll likely have a more stable quarter, and we're going to see the full harvest of that higher throughput to the benefit of shareholders, right? Yeah. So that's important. So that with respect to capital projects, that's the first one. The second one you mentioned is Lindero. Lindero has a large capital project in 2024, which is the $42 million leach pad expansion. The Lindero budget for sustaining capital in 2024 is $65 million. It's a large budget. But out of the 65, 42 is this one project. If we want to think of what's the annual investment rate in our life of mine plans for the Lindero mine, plus and minus $25 million a year is what we should be reinvesting in that mine annually, right? Yeah. But this year, you had to put $42 million on top of those 20. Once the leach pad expansion is complete, that CapEx is gone. Yeah. So how much does that CapEx weigh, that leach pad? If I isolate the leach pad, how much does that weigh on our all-in sustaining cost at the Lindero mine? $400. Wow. Very heavy. So you're taking the hit this year on that. And we're taking the hit this year. But it will benefit the company for 10 years. Sorry to interrupt you. Yeah. And when I consolidate the all-in sustaining cost from all of our mines, that one leach pad project weighs almost $100 in our consolidated AISC. Right. That leach pad project is going to be concluded in the fourth quarter. Mm-hmm. We expect that by the month of September, October, we should start placing ore on the leach pad, and the capital demands of the project are going to be over, said and done in the fourth quarter, right? So that's important for our audience here in your program to having the radar and understand that that is a one-timer large capital project. That project has always existed since the feasibility study, and it was a large capital project in year 3. Well, we're executing it now, right? So, but still generating healthy free cash flow despite that cash being spent on that project. Yes, with that high CapEx this year, that mine still traveling at around $1,900, $2,000 per ounce, all in sustaining. If I look at the cash cost per ounce, it's at about $1,000, so it's competitive.
Yeah.
Cash cost per ounce at Lindero is about $1,000. So then you have to put another, $600, $500 for reinvestment in the business, renewing mining fleet, and all of that good stuff that we have to do. And then this year, put another $400 on top of that. That takes you to 1,900 or 2,000, right? So we see Lindero on a moving forward basis more as a $1,500 per ounce type mine, right?
Mm-hmm. And you'll be able to harvest the benefits of the leach pad expansion for the next 10 years, right?
And even in this with this elevated all-in sustaining cost, I stress all-in because our cash cost. So the mine is funding. The mine covers its cost, generates excess cash, and all of that cash is being reinvested in the business for the expansion. So the mine is self-funding its expansion of the leach pad and all of its capital projects. The mine is self-funding itself, and that's what you want.
Right.
From corporate, we don't send a penny down there anymore. So that project is done this year, and the mine is set for another decade. So
exciting.
So those are the two projects I can highlight from the capital projects side of the business, the Lindero leach pad and the Séguéla expansion.
Mm-hmm.
And then another exciting area that we can talk about, Ron, is the Kingfisher discovery at Séguéla.
Yeah, because it sounds like it's Séguéla to me. You have optimized and from an efficiency perspective, really done a great job of like you said, delivering way beyond expectations in terms of the amount of ore that you can run through the plant. But there's even more now because about 6 weeks ago we heard about this Kingfisher discovery, and it just feels like there's when I look at the company, there's stability in Latin America when you focus on Lindero and what's going on with the silver mine in Peru. But when I look at West Africa, it feels like there's huge opportunity for even more growth within the company. And part of that would include the Kingfisher discovery. Share with us why you're so excited about that, Jorge.
Well, on June 20th, we had our second and latest news release on Kingfisher.
Mm-hmm.
Kingfisher is a most exciting discovery for a few reasons. Let me tell you why. One, it is a blind discovery. What does that mean?
Yeah.
Kingfisher does not have a surface expression. It does not outcrop. It doesn't have a geochemical response on surface. A lot of the deposits or mines in West Africa that we sometimes call discoveries, I mean, there are discoveries from, the modern Western perspective, if you will, because all of those deposits have some sort of artisanal historic mining on top of them. The best prospector in West Africa is the artisanal miners over the years.
Yeah.
Right? The amount of diggings in the region are incredible. There is none at Kingfisher. Kingfisher does not have a gold or geologic expression on surface. How did we discover it? Well, we are covering the entire land package, which is very large, with systematic sampling. And it is one sample over what today we understand as a 2-kilometer long deposit. Only one sample yielded a very, very weak gold anomaly. One sample, a single point anomaly on a very large area. And the team had the good judgment, understanding, how things with the geologic knowledge that we are building, the team decided to go back and put a drill hole right below that. And that drill hole yielded the Kingfisher discovery. To date, we have drilled about 14,000 meters on Kingfisher, 14,000 meters in about 113 drill holes. And we have defined continuous mineralization for 2 kilometers, where mineralization remains open at both ends and at depth. So we're very excited about this one. We don't have a resource estimation here yet, so our plan is to continue drilling until the end of the year with the aim of having our first resource for Kingfisher before the end of the year, right?
Right. Am I correct that it's also only about 4 kilometers away from the processing plant as well?
Right under our noses, as I say. Right under our noses, 4 kilometers away from our processing plant and the main antenna pit where we're mining as we speak.
Wow.
Only 4 kilometers away.
Yeah.
And we drive through that. We've been driving through Kingfisher for years.
Yeah.
No one has realized. It's just through systematic work and being extremely alert and sensitive to these small, subtle changes in geochemical patterns and things that have allowed this discovery. So we're learning a lot about the Kingfisher discovery. So there is not just the value of what we're finding, but the knowledge that we're gaining that we can hopefully extrapolate, right?
Yeah. Yeah. So when I think about Seguela, obviously, like we've discussed, you're already kind of exceeding expectations in terms of how much ore you can run through the plant. Is there a possibility at some point in the future, a possibility that you could expand the operations there, expand the mills, that type of thing?
Yes. Let me start answering that by saying that I don't believe the analysts community, the analysts from different banks and houses that cover Fortuna understand what Kingfisher means yet,
Mm-hmm.
or really are capable or are assigning value to the exploration prospects or exploration potential, better said, of the Seguela property.
Yeah.
Right. So I think Kingfisher is just a very meaningful. Is very meaningful, not just for what it means on itself, but also to the investor. It helps us as management communicate what we believe is the true potential of the property. And you can hear me, and you've been hearing me. If you've been talking to me about Seguela, if you've been listening to me, I'm always excited about the Seguela prospects for higher ounces and a larger, bigger mine. I've been saying that since 2021 when we made the Roxgold acquisition, but I don't expect people to believe what I say. I have to pull through with results, and Kingfisher is one of those. So we're not just saying it; we're following with the execution and the delivery, and that's what's exciting to me. Seeing Kingfisher emerge is just a reaffirmation of our belief that there is tremendous exploration potential in this property, in this large property package under our control.
Yeah.
And I don't believe the analysts and many investors don't fully grasp what Kingfisher means on its own and what it means with respect to what it is telling us with respect to the greater exploration potential in the property. Mm-hmm. I don't know right now, if Kingfisher at the end of the day, and the end of that day is coming soon, but at the end of the day, Kingfisher will be allow us to run the mill at a higher throughput rate in 2025 or 2026, or it'll just go to the tail end of reserves and we'll show, 12, 14, 15 years of reserves. I don't know that right now, but I can tell you that we're drilling aggressively, so I can answer that question in the coming months, right? We have drilled 14,000 meters so far, and I was at site at the Séguéla mine a few weeks ago, and together with the exploration and management team of Séguéla, we agreed to expand the drill budget for the year so we can continue drilling nonstop until the end of the year and more. No, with the aim of answering precisely what you're asking. I have expectations. Yes, my expectation would be that this supports higher throughputs in the near future. But let's produce a resource first. We have the discovery. Before we didn't have that discovery. Now we have the discovery. Give me a few months, and I'll tell you how big it is, how it looks, how it can grow more or not, and then how we are going to run it through the mill. But it's a staged process, right?
Sure. Yeah, you were driving over it for a few years, and I guess finally you said, "Hey, drill a hole here, right? Let's see what's underneath this." I have a question for you. You've built a number of mines over the year. When I think about Séguéla and the potential for expansion, I would imagine, and please correct me if I'm wrong on this, but I would imagine it's a little easier. Never easy to do any type of construction project, but a little easier to expand a mill than it is to go in and just build it from the ground up, because you already have a lot of the kind of infrastructure in place, the camp and everything else. Is that the case when you're looking at mines?
Is usually the case.
Usually. Right.
Is usually the case. And in our particular case at Séguéla, in the original design, we have accommodated a lot of real estate, within the industrial area.
Yeah.
For expansions, right? So we are not against a wall or to build additional tanks or expand their facilities for crushing, grinding. Not at all.
Okay. So you kind of compensated for the potential that you may need to expand.
And we have enough power and water availability to source higher throughputs as well, which is key.
Okay, exciting. Outside of Kingfisher, is there any other exploration going on around the Séguéla mine, or are you just focused on? Yeah.
I think Kingfisher puts a bit of a shadow on a lot of other exciting work going on at Séguéla on the exploration side, at Séguéla itself. We published on June 20th, we published results not just on Kingfisher, but also on the Badior prospect, which is a high grade deposit we discovered recently. Now, does not look as extensive as Kingfisher, but it's certainly higher grade, so those are the type of things that we're continuously finding. Kingfisher being the elephant in the room right now.
Yeah.
But and again, it overshadows the work we have done at Badior. It overshadows the work we've done at Ancien at depth. Ancien is a deposit that currently holds reserves in our mine plans, and we have continued drilling at depth and continued finding high-grade mineralization at depth. So we're excited about that, and all of that work is outlined on our June 20th news release.
Okay. And what about Sunbird? There's some potential interesting developments there as well, right?
We are working to bring Sunbird reserves into our mine plan as we speak, but Sunbird remains open, and just like we expanded the Kingfisher drilling budget, we have also expanded the Sunbird drilling budget, and we will continue drilling Sunbird non-stop until the end of the year on one of the deep areas where we are working to build underground resources. Mineralization remains wide open, and we just continue drilling there. So lots happening at Séguéla alone, right?
Yeah. Yeah. Wow. Well, you've certainly answered any of the skeptics from a few years back when you did the Roxgold merger, Jorge, and have delivered, I think, that by any measure, what has been an exceptional project at Séguéla. But wait, there's more in West Africa, right? Because we have this advanced stage exploration project, if that's the right term to describe it, the Diamba Sud project in Senegal. And is it possible that we could even see some numbers or resource out of that later this year or early next year?
That is the plan. A
Mm-hmm.
resource estimation by year end to be followed by a preliminary economic assessment in the first quarter.
Okay. Okay. And things are going well there also. The drill results that we're seeing are
We
impressive.
started drilling in the month of November of 2023. So we closed the acquisition in September. We were in the ground drilling in November. We've been drilling nonstop until early July because of the rainy season. We have put our drilling on a pause. We'll likely resume drilling in September. And right now, our geologic teams and consultants are working on building a robust geologic model to support the resource estimation. This is a new deposit for us. It's a different geology, and we have to be very careful before we publish a resource estimation. The basis for the geostatistical models that deliver a resource estimation is a sound geologic understanding of mineralization controls. And that's what we're building right now. Sometimes people take that for granted. That's a mistake that puts everybody at risk. So we are deploying a lot of time and putting the right people with the right knowledge on making sure we develop a very robust geologic understanding of mineralization controls. And that geologic model will be the backbone of the resource estimation that we publish. And all of that work is taking place right
now. Wow. Wow. I want to talk about the balance sheet quickly because I'm always one to look at the balance sheet, and cash flows are the most important factors I look at. One thing that I've known you for a few years now that I always admired is that you want the company to have a fortress balance sheet so that it can weather any storm. Were there any moves you took during the quarter to shore up the balance sheet even further? I mean, when I look back, 2-3 years ago, I always felt like when I compared Fortuna to a lot of the other mining companies, that your balance sheet was always amongst the most healthy, but it feels like it just keeps getting stronger and stronger. I know you had the convertible note, and we've talked about that extensively, but is it true? I heard someone say that when you issued this convertible note, there were two things really interested me. It was 3 times oversubscribed, meaning people were very interested in getting in on this deal, but that also it basically lowered your effective financing rate because you used a lot of the proceeds to pay off other debt from around 7.5% down to like 3.75%.
Yes, the convertible notes we issued, raised proceeds of $172 million. We used a portion of those proceeds to pay in full our outstanding debt facility with the bank syndicate we work with. We paid down $125 million under that revolving credit facility. And the interest rate paid on that facility is almost 8%.
Wow.
And the convertible notes bear a rate of 3.75%. So we have significantly reduced the cost of capital.
Yeah.
We have enhanced the liquidity of the company, added flexibility. We maintain a total net debt to adjusted EBITDA ratio of 0.2 to 1. and we have a small total net debt position of $66 million that I expect by year end will be, cash positive, right?
Mhm.
So putting together the said fortress balance sheet has been one of our strategic objectives. It is at times like this when you have to do this. And, this is a business of upheavals. A lot of things that difficult to foresee, control, and having strength in the balance sheet is key. And also, as we see emerging opportunities in the jurisdictions where we operate, we have the firepower to capture them if we see a deep value propositions, right? And so Fortuna today has $350 million liquidity available while maintaining a very low debt to EBITDA ratio.
Yeah, very exciting, Jorge. As I look out into the second half of 2024, I want to ask you, as you look out into these final, I guess, 5 months of 2024 now, what are you most optimistic, excited about with the company? Anything you want to mention in that regard?
We have a lot of levers for growth.
Yeah.
I am obviously very excited about the short-term and medium long-term prospects of growth at Séguéla. I believe that our original view was that Séguéla had the opportunity to be much bigger and better than the feasibility study showed. And I think every day we're taking a step forward, improving that, right?
Mm-hmm.
We're not there yet 100%, but we continue to show growth of resources. We continue to show that we can optimize the process design. Côte d'Ivoire continues to be the prime jurisdiction of choice in terms of business friendliness in the region. So yeah, I'm very excited about that. I'm very excited about Diamba Sud in Senegal. That is our most advanced greenfields project today. It's a pre-development stage project. We still have to go through some hurdles. I still want to see a resource estimation of meaningful size that will support a construction decision, and the work to convert those to reserves and have a construction decision. So there's still some geologic risk, exploration risk, but everything suggests that the project is coming through, right? We just have to, wait a bit longer until the work is done and we see the final numbers. We're very excited about that. And then across the portfolio, we just talked about Lindero. Lindero this year has a challenging year because of the higher capital demands, but once those capital demands are behind us, Lindero reverts to the cash flow generation that we all expect. In 2022, Lindero was our largest free cash flow generation for the business. It operated at an all-in sustaining cost of $1,200 per ounce, Lindero did. And, we have this one large capital project that we discussed. Once behind us, we should see again healthy cash flows coming out of Argentina, right?
Well,
we have some challenges as well, at San Jose in Mexico. That is just the nature of the business, right?
Yeah. Well, we'll certainly be watching closely, Jorge, as we wrap up 2024. I think there's a lot of exciting prospects on the horizon for Fortuna. Thank you for joining me today and on behalf of our viewers as well. You've shared a lot of great insights into the company. You achieved a lot, but it feels like there's a lot more to come. And so thank you. And we will look forward to seeing you next time. If people want to learn more about Fortuna, they can go to fortunamining.com. Is that correct?
Yes.
Okay. Well, thank you, Jorge, and we'll look forward to talking to you next time.
Thank you, Ron.